Welcome to Supernova Stock Watch. Looking at dividend stocks to invest in for a steady income. In this video, we are looking at Gladstone Capital, ticker GLAD. The money you can make with a BDC is why many people are attracted to this type of investment. They usually distribute a large portion of their earnings, typically having very high yields. Gladstone Capital Corporation, GLAD, is one of more than 100 stocks with a dividend yield above 6%. You can find all those stocks here. For more information about the high-yield stocks, subscribe to my channel. Gladstone is one of a few companies to offer such a high yield, with a close to 5% dividend rate compared to the S&P 500's 1.3%, which is one-fifth the yield of Gladstone Capital. But a high yield is not enough if the underlying business is weak, or the dividend is at risk of being cut. This video will explore whether or not investing in Gladstone Capital would be worth it for income-oriented investors. Business overview. Gladstone Capital is a business development company that invests in equity and debt securities. It generates most of its income from its debt investments. This investment is made via various debt and equity instruments with generally very high yields. Loans typically range from $7 to $30 million and have terms up to 7 years. Gladstone Capital prefers targets in industries with stable margins and cash flows. They also seek investments with good growth potential. The company targets companies that are in the non-cyclical and non-financial sectors. These sectors have steadier earnings that don't vary as much, which can minimize the changes in a company's growth levels. These companies are leaders in their respective industries. They have the growth potential and generate annual earnings between $3 and $15 million. To continue paying its hefty dividends to shareholders, which is a primary goal of Gladstone Capital, its investment portfolio must continue to generate enough interest and dividend income, capital gains, and other financial benefits, so they outpace its operating expenses. They have a diversified portfolio with assorted investment types and industry sectors. Gladstone Capital believes that investing 90% in debt and 10% in equity can help generate higher returns. For 2021, Gladstone Capital's portfolio had a fair value of $577 million and was diversified across 47 companies and 14 different industries. Of their investments, 87% were secured loans, with 69% in lower risk assets. Gladstone reported Q1 results this February, which were in line with expectations. The company invested $111 million into 6 new companies, with an after-loan repayment of $97 million, notching up new originations of $14 million for the quarter. Gladstone's secured first lien assets were 72% of the total portfolio, and their weighted average yield on debt was 10.3%. They generated a net unrealized appreciation of $10.2 million in the fourth quarter. Still, the venture capital investments have increased by 3.4% this quarter, almost double the previous quarter, to $577 million. Net asset value per share rose 1.7% to $9.44 in Q2. Net investment income increased 34% over Q1 to $9.2 million, and expense reductions increased margins. This led to a 35-cent rise in assets on a per-share basis. Thanks to the company's investment strategy, they should have a lot of opportunities to look forward to. Growth prospects. One of the most plausible ways Gladstone Capital is growing is through an increase in interest rates. The company would benefit from this because most of its debt is in variable rates, which are essential assets for them when interest rates rise. Looking back, it's clear that Gladstone has had trouble growing in the past few years. The company used share issuance to fund net investment income in dollar terms, but it hasn't been enough to increase net investment income per share. Given this history, I believe Gladstone's medium-term growth rate is 0%. The yield on the company's portfolio influences its ability to generate income and cover its expenses. That is why it pays out dividends, which are handed out to shareholders. Over time, the company's yield has risen to become nearly 11%. As of this last December, the company's investment portfolio has a weighted average yield of 10.3%. Considering how costs are offsetting growth, net income per share continues to be stagnant, and the reason is because of higher expenses. Gladstone's portfolio continues to grow in dollar terms, but given its offsetting rising expenses and loan non-accruals, net investment income has struggled to grow. Gladstone Capital is looking to continue growing its new investments and add more companies to its portfolio. In recent years, the weighted average yield has been falling, but it's still well above the high yield average. The company has $100 million available on its bank line of credit, which could also be used to grow the investment portfolio and increase net interest income. Dividend analysis. Gladstone Capital pays a monthly dividend, which means shareholders get 12 dividend payments per year. That's more than 4 quarterly distributions. Gladstone currently pays a monthly dividend of 0.0675 cents per share after a 3.8% increase to the dividend tip in April 2022. Previously in 2020, Gladstone had cut the dividend by about 7%. As a result, the yield is still not as high as it was pre-COVID. Gladstone Capital is unlikely to raise its distribution soon. They offer a yield of 6.3% every year, which is higher than most other companies. Gladstone Capital has an excellent track record and has maintained payouts, even when things were complicated. They can do this because of their tax status and their fundamentals. BDCs are required to distribute at least 90% of any taxable income. This eliminates income tax at the corporate level, allowing capital gains to be passed through to shareholders, similar to a REIT. With a projected dividend payout ratio of 92% for 2022, Gladstone Capital's dividend payout is secure but without much cushion. BDCs will always have high payout ratios due to the tax rule of distributing nearly all of their income, but it is easy to see why Gladstone Capital hasn't raised its payout for such a long time. This is a tight payout ratio, which means the company may not be able to sustain a significant economic downturn and maintain its dividend. As a result, Gladstone Capital's dividend could be jeopardized if there were another substantial financial crisis. Assuming continued economic growth, its dividend appears to be sustainable. But the high payout ratio introduces a relatively high risk to the sustainability of the dividend, particularly during a recession. Bottom line: investors should be cautious about high dividend yields. While this is common in the BDC asset class, many have been cutting their dividends over the past few years. Gladstone Capital did cut its dividend in 2020. In April of 2022, they announced an upcoming special dividend, but it is still below the company's pre-COVID level. I don't believe they will make another cut to their dividend anytime soon. Investors will need to follow the company's future earnings reports carefully. They don't have much of a safety net, so any deterioration in their portfolio could put the dividend payout at risk. Gladstone Capital may be attractive to income-focused investors looking for steady, high-yield income. I enjoy sharing my insight with you and helping both of us become better traders and investors and find some level of success. Please check out my other videos and the description for great deals and sign-up bonuses.